What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Today, my guest is Tracy Shuchart, otherwise known as Shy Girl. Tracy also writes an energy-focused letter at hedgefundtelemetry.com. Now, if you've been following the podcast over the years, you know that Tracy is one of my most popular guests. She's been on the show a bunch of times before, and today we got into a lot of topics. We talked about the CBDC, that's the central bank digital currency. From there, we talked a little bit about Bitcoin, dollar, gold, silver, platinum. Of course, we talked a little bit about oil and some equities, and also oil equities. Tracy and I go way back as futures traders, so it was interesting to hear that she's trading actually the miners and oil equities. Really, the show is focused a lot on Tracy's macro themes, things she's seeing out there, and markets that she's trading based off of those macro themes. Remember, everybody, Futures Radio Show is sponsored by CME Group, TradeStation, Trading Technologies, and FTSE Russell. The Russell 2000 is a key benchmark for small-cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 futures symbol RTY and Micro E-Mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. On this show, you're going to hear me talk a ton about execution. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. You can learn more at tryttnow.com. Let me take you right to my interview with Tracy. Shy Girl in the house. What's up, Shy?
Hey, how you doing?
I'm doing good.
Good to be
you look
back.
Great. You look great.
Good.
Podcast is video.
I've got that. I showered today, so just for this.
Well, you're such a workhorse. I get up get up at 4 a.m. Rarely do I get up that early, but sometimes I am. It's like you're tweeting, I see you, Keith, maybe a few other people, and then it's at night, I see you're tweeting. You're always putting out a ton of content, and I think we'll kind of start there. I mean, what's catching your eye lately? What are some things you're focusing on?
I think that everybody should kind of be focusing right now on the central bank digital currency. I think I tweeted about it today. That the ECB is definitely going to have a digital currency, which we all kind of knew that they were, right? I mean, the IMF started writing papers about it in like 2017. So you kind of knew that that's the direction that they were headed in. And then, you heard a lot of BOE brought it up, Carney brought it up, was the first person to bring it up, right? At Davos, I think, Mark Carney. And then the ECB started talking about it. And now we've heard a little bit about it from the Fed. So, that's something that you kind of know that is coming. And sort of, what concerns me a little bit about it is that, they're using it as a tool to basically ensure that they can instill heavily negative rates in times of recession. Which basically it punishes the savers. So, I mean, I have a lot of skepticalness about it in general, I would say. And if you don't really know a lot about it, I'll put out a tweet. There's a couple IMF papers that people should probably take a look at.
I don't know much about it. I've watched the things that you've tweeted about it. I've read very little on it, in all honesty. It's not something I've spent a ton of time on, but you're right. It's something that we have to keep an eye on right now. I mean, why don't we just continue? Why don't you just maybe explain a little bit more to everybody about it? I think we all get the kind of gist of what it is, but right. Maybe not.
Yeah. So it's not exactly everybody says, well, everything's electronic payment as it is right now, right? But really what it is that it's giving the central banks control of not just monetary policy, but fiscal policy as well. And to me, that's a little bit dangerous, especially coming from an unelected body. And I think that's a lot of control to put within the central banks. So instead of, your electronic currency basically all goes through them instead of, a bank or whatever. So basically it's very centralized, and it gives fiscal policy power to the central banks.
Yeah, they've been punishing the savers for years. And thank you for explaining it a little bit more. You and I on the trading side of things, what are the implications? What do you see as trades coming from this?
Well, I think, I think that it will, if we start seeing, deep negative rates, right? So I would start watching when, central bank rate policy, right? So that'll, affect bonds and whatnot. So that's kind of the trade that you want to be looking at. And then also, as they start implementing this, you will have to, look, are they going to completely phase out paper money? Are they not going to, or are they going to have a dual policy, right? ECB right now says that they'll still have paper money. But then again, that's going to affect the whole currency market in general. So, I would be looking at, treasuries and currency markets as we kind of switch over to these digital currencies.
Yeah, I agree. I actually, as you were talking, I was pulling up a couple of markets. What are your thoughts right now, like in the bond market, the 30-year in general?
I don't know. I think that, those yields are getting a little high. And I think that the central, I think the Fed is going to start getting uncomfortable. And in the big scope of things, no, they're not that high. But for this particular environment, they're high, right? And so I think that they're going to have to do something before they, scare the hell out of people and say, we're going to just come out and say, we're going to do yield curve control, which I think would freak the market out in general. So I think they're going to we'll have some sort of extra QE, Operation Twist. I don't know what they'll call it, but, I would expect that coming down the pipeline before they have to actually go out and say, we got to control this.
Yeah. It's, I feel the same way. When you look at the bond market, I guess one thing I want to ask you is what do you think the threshold would be where they would start to really take notice? Right now I'm looking at the chart and I'm just looking at everything. It's like, yeah, we kind of broke out a little bit, basically for a little bit where we were back in November. But like you said, we're relatively still not that high yet. What do you think would be the threshold for maybe where all of a sudden it becomes, hey, get ready for an announcement?
Right. I think, if we start seeing yields like over like 1.5%, anything, okay. I think forget it. They're making an announcement. But
emergency meeting.
Yes, like right away. And I don't really see, I think that like 1.5 is kind of where they'll really start getting uncomfortable.
Yeah, I'm going to be very curious to see what happens with this new administration coming in, new Fed chair Yellen. What do you think about what Yellen coming in?
We kind of already know who she is, right? She's super, accommodative. She's, so I would expect the Treasury to be very accommodating elsewhere. So I would expect, a lot of debt to incur, like add on to the pile of debt that we already have. I think, not MMT per se, but, I think the Treasury will be very loose in their policies and very accommodating to the Fed and things like of that nature.
Yeah, just to clarify what I said, it's former Fed chair coming in now. She's going to, Secretary of Treasury. Got to get used to that. I want to talk a little bit about the dollar because this is kind of all playing into it. You tweet a lot about the dollar, and everybody really right now, really from IRA to all the macro people that I talk with, let's face it, the dollar right now is the central focus, and it's not a market that I trade, but I'm watching it constantly because there's just so many things that are trading off of it right now. You could just think about from commodities to Bitcoin to just everything. And we just talked a little bit about bonds, stocks, everything. And I know a little while back, I think you were tweeting you were getting a little bit bullish of it.
I did play the long side a little bit,
So you played it along a little bit,
but
and that has that changed? Like, what do you think about where the dollar is right now?
well, I think that, everybody says death to the dollar. I don't think they're going to let, dollar's not going to zero. They won't let that happen. We still are the world's reserve currency. So, having the dollar a little bit lower is, good for emerging markets, and things of that nature, because, their dollar denominated debts were not so expensive anymore. Right.
Yeah.
But I think that, with the dollar, I think that, I don't think they'll let it get too far, and, I can't say, oh, it's, going to bounce here, but it is a very overcrowded trade. So what I am worried about is not trying to catch the dollar, but what I'm worried about is that if we have any kind of incident that would, where the dollar bounces any, not big amount, but, if it bounces a buck or two, you might start seeing, a short squeeze there, right? As people bail. And, I think it was Morgan Stanley just came out too and just said they're no longer bearish the dollar going into 2021. So, any kind of catalyst, and that could be a catalyst too, if they move their institutional clients, out of their short positions or anything like that. I just think right now it's at kind of that precipice where, anything could cause a dollar spike. And although it may be temporary, it could cause a lot of pain for some people if you're wrong-footed on that one.
Yeah. Well, in just a moment, we're gonna pause for 30 seconds, and during that time, I want you to think about this next question, because I definitely agree with you. Like, if you start to see that dollar bounce, that could be one of those bigger bounces that everybody anticipates. You get a little bit of a squeeze, but the implications, like everything we're talking about today, go so deep into so many other markets. So what I want you to think about is maybe give us what you think would be the markets that would be the most sensitive to a bounce in the dollar, and what potential trades that would set up. So we're going to pause for 30 seconds and we'll be right back, everybody.
Why did I add futures to my trading strategy? 24/7 access to diverse global markets, like wheat. Can you say growth opportunity? We should probably harvest that.
Get S&P 500 and NASDAQ 100 by the slice. Just 1/10 of the pie. Trade the tastiest index futures, micro E-Mini options with TradeStation. Get a piece of the pie now.
All right, traders, we're back with Shy Girl. So Shy, we talked about that dollar potential bounce. Let's just say that we get one, right? A buck or two or whatever it is. Could create the squeeze in the dollar. What do you think the other markets are that would be the most sensitive, where you think the trade opportunities would be countering that dollar bounce?
Well, I think, it's kind of dependent on how long is it about. If we just have a spike, a temporary spike, then, probably you would get a knee-jerk reaction in, gold, silver, crude oil, grains, but it wouldn't be long lasting. Now, if we have a sustained bounce, like if we last over a month, that's where it's gonna really start grinding on commodities, right? So it would really depend on how long that spike lasted, if the potential spike, if we get one. Again, if it's for any length of time, then that's really going to put pressure on, obviously, the commodity markets, other currencies, even the bond market, because it's just so deep. I think, especially with equities, the S&P, NASDAQ, Russell, even as high as it is right now, any kind of sustained long dollar bounce, say over 95, I think would put a lot of pressure on equities as well. So that's where I would kind of be looking. I would want to probably trade the short side in the equities if we started getting any kind of bounce for any kind of length of time.
Yeah, I mean, that's something that would first come to my mind as well. I think that would probably hurt the rally a little bit in equities. But going back to, like you said, the commodities, I mean, I've been looking at these commodities, soybeans. I mean, these moves are unbelievable.
Huge, right? So, I mean, so anything ags and crude oil right now would be most affected. Because really, if you look
crude.
at, and if you look at gold, we're still stuck in that range. Remember, I think, I don't know, what last time we were talking or whatever, I thought gold had been done for the year and it would be
and
in
you were
range.
right. I was long gold. You remember? And you were telling me I was long. I got caught. That was a trade I was working for a while. I kept looking for it to get back above. Sorry to interrupt you, but you were spot on at that point. I was wrong. I kept accumulating the longs, and I just eventually they got me stopped out. I didn't get stubborn with it though, Shy. I didn't get stubborn.
No, but so we're still kind of trading in that range with a dollar as low as it is, because obviously I think right now rates are affecting gold more than anything, right? Yeah. But what if we get a dollar spike, then I think you could reposition a lot of things, right? I think that you could then take a gold long for, the dollar spike to come down, because they're not going to let the dollar get too high.
Yeah, I mean, gold, I want to stay on gold a little bit because with every bone in my body, I want to buy the dips in gold. I can't take it. It's one of those things where I have to really be disciplined on it. And I wait for my setups. I've stayed away from it. And I talked a little bit about this with Ira. It was a couple months ago. We talked about how really Bitcoin is now it is set in stone, in my opinion, at least for now. Things always change. It is by far where people are going as a hedge against central banks.
Right.
He and I talked about this a couple months ago, and I said it's not a question of whether we think it is or not. The market's telling you that it is.
Right.
And a lot of what I've been thinking of is maybe if Bitcoin comes off, that might be bullish for gold. And I hate when I'm searching for reasons to want to be long a market, but maybe it's because I'm listening to Peter Schiff too much.
I really like gold, but for me, the way to kind of play that, to be honest, going into, further into, this year, is I'm actually looking at miners, right? So I'm looking right now to get long platinum, silver, and I am long a couple gold miners right now. One of them's okay, the other one's not working yet. but I have faith. So that's really how I'm gonna take that play, because I am bullish metals, into 2021, 22 even, just because of, EVs and things like that. That's why I kind of like the platinum play. And then, gold and silver, everybody wants to get long gold and silver, and I know that it's really hard right now with rates and all that. And again, that's why I'm choosing to kind of play it with miners.
Interesting. So you're going the miners
because miners
route.
are going to have.
I was going to ask you why.
Sorry. Yeah, because a lot of it is because production is waning, right? I mean, usually production's about like 1% each year. And because of CapEx cuts and things like that, kind of the same way that's going on with crude right now, right? With all the CapEx cuts, we're going to have kind of a bit of a supply crunch in the future. And that's kind of how I'm looking at production. So that's why I'm looking at miners.
You mentioned some things that you're looking at to get long right now, the miners. What other things are you trading right now? What positions do you have?
So I'm miners. I'm in a lot of oil equities right now. Some chemicals. Yeah. Chemical companies and copper and nickel miners. As far as, like stocks are concerned. As far as futures are concerned, I was swing long crude for a while. It's getting a little I closed that position. It's a little overdone right now for me. But I'm not, I'm trading futures here and there. I'm mostly playing the equity side. I mean, because if you look at a lot of those oil equities, I mean, they were like 80 to 90% off. You can't, so that's, that's kind of.
It's interesting hearing you say that. I mean, I know that you and I, our bread and butter has always been futures, and I know that you have been moving, doing other things besides just trading futures. And what is the reason why that you're moving into some of these other things? Is it sounds to me, I put oil equities, you said chemicals, you talked about the metals. Is it just really because I know we've talked about this with your edge. Like I said, you're a workhorse. I mean, you read probably more than anybody I know. I know you put a ton of time into this, and you do have this, you have a great macro mind, and you think outside the box. And I'm curious, what is developing behind the scenes for you to say, this is where I'm going? So like there's obviously some theme I see in what you're doing.
Right. Yeah, I mean, I think the big thing in general is, I'm seeing all these things, and metals or mining and crude oil is kind of all the same. I mean, it's all lumped under mining, to be honest. And I'm just seeing the same situation in both, in the bigger picture, looking out a year to 2 years. And there's opportunity there. And so I started to get into the equity side a little bit more, especially because a lot of these miners and a lot of these oil companies, and I mean, literally they're the most hated thing on Wall Street and have been the most hated thing on Wall Street. So when you're looking to sort of build something and you see, the charts, they're 80 to 90% off. I mean, that's kind of where you want to, kind of start collecting things, right? It's when it looks the worst, as long as your macro theme behind it, would support that move. And so I just looking into the markets that I look into and all the macro research that I do, the picture just started coming, the picture was just there for me. The opportunity was there for me. So I kind of moved into that direction a little bit. And I write a lot about that. And, I'm materials and energy strategist over at Hedge Fund Telemetry. So, I write about that stuff every day now, instead of not just for me, for people now.
Yeah. Well, congrats on that.
So really, that's thanks. Yeah, so that's just so really that's why I kind of been moving into that. I mean, I still trade NASDAQ, and I still trade futures markets. It's just, I've kind of gone in a little bit different direction this year.
Well, you've expanded. Like I said, you have that macro mind. It works for you. I mean, that's what you do. I've known you for a lot of years now. I mean, you love to read, you love information, and you're going where the opportunity is. I mean, that's a big part of your edge, right? I mean,
right.
That's what you're good at. So why not go to where those opportunities are? And like I said, congrats to you and Tommy, Hedge Fund Telemetry. Big fan of Tommy's, obviously a fan of yours. So I wish you guys all the best with that. And traders definitely should go check out what Shai is doing over there. A couple of other markets we mentioned, and I just want to get your thoughts on them today. You talked about oil equities. You talked about how you were long oil. What do you think about oil right now? Is it the dollar? Is that what it cares more about? Is it fundamentals? What is it that's driving the price of oil right now?
Well, I think, obviously the dollar is helping. I don't think that's the main driver. People will maybe disagree with me, but I really don't think that's the main driver. I think that the market, and I hate this phrase and I can't believe I'm going to use it, is forward looking on this one.
I know that's one of my not favorites.
I totally hate that. But like I said, this is what I eat, sleep, and breathe. And so really looking forward in the markets, next year, the year after, we really are, we had a demand problem, right? 2020, we're going to have a supply problem. We just are, no matter what. I mean, I know that we're, turning over to EVs and renewable resources, but you have to realize that these things take way longer to change than you think they're going to change. Right. I was talking to somebody about, we were talking about EVs, and he's like, I think it was a reporter at Bloomberg. He's like, Tracy, let me tell you, she's like, if they set this goal, add 15 years at least to the EV market. So I was like, okay, then. So, so I think, I think we're going to have a supply problem. Market's looking forward. I also think there's opportunity there, right? People, I think there's opportunity. And really right now, we have rebalance for the CBRE index for oil. That's what's happening right now. So we'll see what happens next week. That was the last week and this week, and they had about 80 to 100 million barrels to buy. So we'll kind of see, maybe we take a pause next week on oil. So part of that was also rebalance.
Interesting. I want to move on and talk a little bit about Bitcoin, because I really don't think I could have a show with you right now and not just pick your brain about it a little bit. I mean, it's one of the craziest things I've ever seen. And I actually started trading it a little bit back and forth. And I'd love to say I held longs the whole time, but no, they puked me out, got me back in, out, whatever. But I'm a trader. It's just the way it is sometimes. I wish I kept a lot of things that I didn't, but. With Bitcoin, right, what I find to be interesting about it right now, and I'm curious to see what you think, is that it's trading different now than when we made that high last time. I just feel like there is the participation now from the pros. You go back and look at it when it got to 20,000, whatever, last time. It was all about the little guy. Now I feel like that is shifted, and regulation was actually a good thing for Bitcoin, even though that's not what they wanted originally. But giving access to it, look what it's done. What do you think about it, the way it's trading now versus before, and just your thoughts on it in general?
I think that, it's still making, 20% moves in a day. So,
day.
I guess for
currency.
Bitcoin, that's
it's not
very volatile.
No.
It still has big price swings, but yes, it's, it is a lot less. And I think, you have a lot of these, Scaramucci just started a fund, and, you have guys like Yusko, who's had his fund basically change his whole business over to it years ago. But
yes, he did.
Now you're hearing a lot more people, a lot more managers and things like that are adding that to their portfolios and things of that nature. And so I think, people are getting more comfortable with it. And I think, it's 10 years in now, it's kind of established. Whereas before it was kind of unknown. People didn't really, big fund managers didn't really want to jump into it because they didn't, know much about it. Now it's kind of a more established. So, I think that's why we're kind of seeing some of the moves that we're seeing. To me, it's a little too I don't know how somebody would day trade that.
I do once in a while. Yeah, it's just, what it is. It's just one of those things where I look at it. I know where my stop is if I'm close enough to a stop, because that's the whole problem with that market, is that the stops get to be so wide that it's very hard to be able to even utilize the futures for them. I think the futures are a lot more for people that have a bunch of spot, because it's like just to day trade it. It's like I'm looking at my stop going, this is a pretty expensive trade for a one lot. You're like, wow,
right?
This is, because it's, how many thousands of points to be right. Because you and I, we follow a process. But there's been times I've used them and not. It just depends on the situation. But yeah, I look at it, and everyone always asks me, "What do you think about it?" I go, "I don't know, I don't know what to tell you what I think about it." I'm just trading it. I'm somebody who's just,
it's just another, if you're just trading it, I guess it's just another thing. But it's if you take the technology, the part that I think is exciting is more the technology than the actual, than actually using it as a currency. Because right now, I think it's because of it still fluctuates so much. I think it's pretty hard to use as a currency for me. But the technology, what you can use it for, and things like that. Josh Crum, he's starting at the Abex technology. And really what they're doing is they're starting this new trading platform that is physically traded nat gas, right?
Yep.
Futures. And what they're really using the technology for, instead of, you get a warehouse receipt, like if you take delivery, it's usually like a piece of paper, they, FedEx you could do anything with it, which is, just a bearer asset. So they're digitizing that, they're tokenizing that, so that it's more transparent. You don't lose it. You can actually, use that for a loan against something else, and things of that nature. So that's kind of really exciting, I think.
Yeah, it is.
A way to use that technology.
Yeah, I heard that
As for
podcast.
Bitcoin itself, as for Bitcoin itself, I have a little, but I'm not a Bitcoin millionaire by any stretch of the imagination.
The ABAC story is really interesting. I heard that podcast with Eric Townsend when he was on the Huddle, and then I actually spoken with Eric a little bit about it, and eventually going to be talking with him a little bit on this show. I think it is a very interesting story, something to be stay tuned about. Futures traders. It's if you haven't heard it yet, you go to listen to that podcast or check out Eric's podcast with Macro Voices. And before I let you go today, Shai, I mean, we talked about a lot of different markets, and one of the things that I always like to see where your mind is at, as I talked about, I love picking your brain and hearing what you think about markets. You talked to us today a lot about the things that you're currently trading. Before we let you go, what is a story out there that's brewing? Because I know you've got, we talked about this a little bit, where you use Twitter actually as like a journal. Right. You and I talked about this in the podcast, and that over time, you go back and you're kind of like building your themes. What is building for you right now that will start to get you maybe excited for some trades coming up?
Again, the minor thing is really my kind of what I foresee in the future. Like that's kind of, what I've been kind of working on the last couple of months or so, has been my big theme sort of focus in that way, to be honest. I think really what I'm looking for really is to see, I want to see this administration come in. I want to see if they go forth with their infrastructure plans and things like that. So, right now for me, we're kind of in that transition period where I want to see really kind of what comes to fruition, as far as, how the U.S. is going to move forward a little bit.
Oh, it's going to be interesting to see that, isn't it?
Right.
That is going to be something to watch. And, I kind of fibbed a little bit when I said that was going to be the last thing, because the one thing we didn't talk about today, and we will end it here, is really just stocks. The stock market. It's just one of those things where 2020 for everything that it was,
insane
in terms of surprises, right? The craziness about it. And where we are in the stock market, and we know a lot of the reasons why we're up here, and some of them sometimes we just scratch our head and say we don't know why we're here, but we are. But you said you've been trading. I know that you and I, we like the Nasdaq, we like the S&P. Just what are your thoughts on the overall market, and how you've been playing it, and just maybe some things that we should be watching for that you think would be of interest to either catapult this rally even further, or start to pull back?
Well, I think that everybody always is looking for some crash, right? We already know at this point that the Fed's not going to let that happen. So, outside of, I don't know, a complete lockdown again, or, who knows, right? Any unknown could happen. I think this market's still, going to grind higher. Now, that being said, I think with the incoming administration, the market was very happy. Seemed very happy Biden, was elected. The market seems very complacent to me right now. So I think we could be in for some volatility in February, as when we start seeing some policy changes, when we start seeing some foreign policy changes, and things of that nature. You know, we don't know what Wall Street is going to think of some of these changes. So really, that's what I'd be looking at. I mean, we might be in for, you know, a couple of volatile months, which, you know, as a trader,
Happy.
I'm all for.
Yeah.
I'm super happy.
We've stalled a little bit here.
You know,
nobody.
So that's really what I'm looking for, you know, for. I mean, I think the market's a little frothy, but I always think the market's a little frothy.
Yeah, because we're traders.
I think the market's a little, right? I think the market's complacent right now. So, you know, that's what I'm really thinking and looking in the next couple of months is, you know, watch out for kind of some of these policy changes and how they'll affect, you know, some of these, you know, if they change tax policies, capital gains taxes, things of that nature. You might see people pull big funds, pull money out of the U.S. market and put them somewhere else. So those are the kinds of things that I would be looking for.
Yeah, financial transaction tax. I'm curious to see if that gets pushed through. You're right. I mean, it's the policy that's going to determine what really happens here. And, you know, one thing, just as a trader, I look at it as what's so different now. I mean, I was thinking about this the other day. I started at the Merc in 95. I got my membership at the end of 98. And I remember looking at back where the S&P was like, when I first got on the floor, it was like 400 or something like that. And you laugh thinking about that, right? Because it could move that in a day, or maybe not a day is just quite yet. At some point, I'm sure we're going to see that type of move. But it's so different the way that the market trades. It was so much more back and forth. And it was like, even when we were making highs, I think as a day trader, the environment is very different. And one thing that I have noticed over the past several years is that when we are in these bull markets, like the way that we are, it's like I'm almost only trading long now. I mean, and it sounds just so crazy for me to say that, a guy who loves to be short. Like, I like it, right?
I love to be short.
I love to be short, and I can't help myself. But I look at it, and everything I look at goes,
you got to buy the dip.
You've got to. My strategy, I was pulling up all my stats. I talked about this with Morad. And during that whole break in March, my long strategy still worked better. So if I just took longs, I would have made more money. And it's crazy to say that, but it just did, because the bounces were so big. But in the areas that I had setups, and I just said, was another thing where I looked at it and said, and the sell-offs are so fast and they're over so fast that it's like, it's hard for me to even anticipate drops as much. And maybe this is where the biggest drop will come in again. I don't know. But my point is that I just look at it and go, we go up until it's just, we have these big down moves that come all at once. And those days are recognizable. So you might as well just wait till those days come. And that's when I trade them short, right? On regular days, I'm just not really looking for them. I'm just putting it out there. I don't know what you think.
No, I mean, I think that's what it is. I think that, you know, I remember like 2000, it's like 17 or something. 2016, 17 was just that grind that like we had. It was just like a straight up grind, horrible, right?
That was not fun.
No, it was horrible, right? And I love shorting. So, you know, I mean, I learned my lesson. That market, like, it was, you couldn't even short it. There was nothing to short. You might get like 2 points.
I know. And it's like these people that keep calling for tops. I just keep looking at it going, when the markets are breaking out like they are, and there's so many things. Why is it that,
everybody keeps making their wedges wedgier, right? Everybody's like, it's the top now. Like,
yeah, well, I'm going to short some of these here. I mean, for me this year, the Russell, because it's breaking out, I've been continuing to look to get long that market. The problem with that is that I don't get the chances to get in a lot, and you have to take these small pullbacks, and then I end up not trading as much.
That's hard.
And I'm not a breakout buyer in futures.
Yeah, I mean, it's hard. The Russell's been hard to catch. But I mean, it's good to see some, it kind of was lagging all year, the rest, right? Small caps were lagging, both indices when we started to bounce again. So, that kind of just started getting some love the last couple months or so.
Healthcare and energy
started catching up with the rest.
Yeah, healthcare and energy. So, when the Russell, And for the traders out there, I've talked about this before, but when you look at the Russell, it's not like the S&P or the NASDAQ. It's not really individual stocks that move it. It's actually really sector-based, and healthcare and energy were big movers in the Russell. And those are just things that, as a Russell futures trader, I've done shows on this. Like, you just have to keep an eye on those sectors, because when they get hot, they get hot. I mean, specifically, even like when you go into the biotech and Russell, that's a sector just to watch within a sector. You know, it's just things that you have to keep an eye on when you're trading Russell versus like the S&P. A lot of times you could really, or NASDAQ, you could look at, you know, like, you look at the handful of stocks that everyone knows, right? But the Russell is just, it's a little bit different. But Shai, it's always great to speak with you. I'm so glad you came on to do video with me.
Absolutely. And thank you.
And I'm very happy for you and Tommy, like I mentioned, with hedge fund telemetry. I'll get that name right today. It's such an easy, I'm butchering it. But tell everybody where they could find you on Twitter. I know most people listening probably already follow you on Twitter. One of my faves on Twitter. I think you were one of my first like 5 follows too. I look back when I first started, and then also where they could learn more about what you're doing with hedge fund telemetry.
Yeah, so I'm at Chigirl, CHIGRL. And then hedge fund telemetry. If you actually go to my Twitter bio, there's a link to the website there. If you want, you can check out what I'm doing there. I think there's a trial offer on there, just to check it out. I cover materials and energy. So yeah.
Yeah. And like I mentioned throughout the show, nobody works harder than you. Nobody does. I mean, like I said, I've known you over the years. You're one of the hardest working people I know. You love traders, and I know your heart is always in the right place in helping traders. So everybody go out there and check out what Shai is doing. Shai, you're the best. Thank you so much for joining me today.
Thank you.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.